Welcome to the As Yet Unknown podcast. My name's Alex Snyder, your back pocket coach-sultant and connection catalyst. Entrepreneurship is a bit like bungee jumping, a big leap into the unknown, and it can be a lonely, bumpy ride. It's also one of the most empowering and liberating things you can do. Each episode is a dose of fresh perspectives designed to leave you feeling connected to innovative ideas and inspired about growing your business your way. Thanks for tuning in. Now let's have an adventure.
Welcome, Christian. Thank you so much for joining us. I know that there's going to be so much value on a wide range of topics because we always have such winding conversation with our broad range of interests. And also just thank you before we jump in for your generosity with your time has always been something that I appreciate so much since we've met. You have just a fascinating journey. I'm not sure if there's any industries that you haven't touched in, maybe space exploration, still to come, but you're a very inspiring serial entrepreneur, investor, and venture fund founder. So can you give everyone a quick overview of how you got here?
Thank you so much, Alex, for the invitation. It's a pleasure being here. I'm super excited to be part of the show and part of your podcast. Thank you again for the warm invitation and the warm intro. A little bit about me. So I started out of Santa Clara, graduated there to 2010, and somehow made my way after a year of trying to get a job in finance to hire me. I finally got myself to the marketing department in the Silicon Valley Bank, and eventually got into the capital department. That's where I fell in love with venture capital and startups. That's where I met Impact Hub, which I eventually co-founded here in El Salvador. And that's where my journey pretty much starts. After that, after getting fired out of Silicon Valley Bank, because it's my liked me very much, but it was, I think, the part of the journey. I made myself back to El Salvador, where I started my first startup, which was a coconut water company, where we laser engrave coconuts and we shipped them all over the States, first to Miami, to all the high-end hotels, restaurants on the beach, and New York, Hamptons, and LA to festivals and all these other restaurants. And that's pretty much where my journey started. We're the first to laser engrave a coconut. Who would ever think of engraving a coconut? It just looked pretty cool, and there were no chemicals on it, so you could put whatever brand name you want. From there, after I sold my share from the company, I kept on doing the same business with my family, as the production of coconuts came from my family business. So we kept on managing agricultural products, developed other products as coconut milk, coconut sugar, coconut bowls, coconut water, but still in the coconut, then bottled. And we powdered the coconut water, out the coconut milk, jumped into coconut shavings and coconut flour. So all these were products that now we're selling here in America and about to start exporting to the States and Europe. And then I decided that was just not it for me. To do it more, so I co-founded partner with the purpose of helping create an ecosystem. Because when I started, it was nothing. You could not get help from anybody here. There was no ecosystem whatsoever, whether it was tech or non-tech. And so we need to to create that situation where people could actually go ask for help without having to pay thousands of dollars or have to compromise a big stake of their fee to get somebody to live. And that's where
Wow.
I got tickets myself into these companies. And then we decided, well, why don't we just start up a fund? And I went to my family business growth linear, especially the traditional, but family growth is financially. So sometimes you have to bridge the gap. So the idea was planned to create a venture fund. Eventually, 10 years later, we were given the possibility with some cash to create the first venture fund, privately owned. And then 4 years later, so 2021, we decided to keep on moving and decide to create the first institutional venture capital out of El Salvador.
Wow. That's
Here and here.
amazing. That's such an amazing journey. And I love that you took your experience, saw the limitations that maybe slowed you down, but didn't stop you, but might actually stop others from being able to bring really meaningful businesses to market, and just solution to make it different for other new companies, for other founders. And what an amazing achievement to be the first, to have so many firsts for your region.
It definitely is. And I'm pretty fortunate to have such a good team and people around me to help us create this new adventure each and every way and every step of the way.
Yeah. And I've had the pleasure of meeting your co-founders and others that you work with, and even some of your portfolio company founders. And it is such a fantastic group. So it's really amazing. So this series is very focused on the recession, but obviously we take some winding paths to talk about that. So we're not limited, but I do want to start with a question just around the recession, because we're firmly in it at this point. It's not a question of what's coming. There's a question of maybe how bad and how long. The markets have dropped 30-40%. We're seeing companies, big and small, miss target. We're seeing large layoffs amongst all the other indicators. So what questions are you getting asked most from people, given that you have a particular expertise and visibility in the investment space?
I'll separate it into people that are not invested with me and people that are. So my LPs then just firms ask me for advice. And instead asking for advice, are asking me, the ones with cash, where do I put my money? And then there's the ones without cash. It's, what do I do? Obviously, the answer to number 2 is, don't get it out. Ride the wave. After, definitely ride it out. And things are gonna pop up eventually. But taking a hit right now, unless you're making a lot of money elsewhere, it's not going to give you any tax benefits, but just a massive loss. And the ones that have cash, I'm asked to talk to their financial advisors. I'm not your financial advisor, and I don't want to pretend to be one, and just because that's not my expertise. Even though that's what I do for myself, I'd rather not compromise my reputation giving advice that I'm not qualified or certified to do so. So I try to stay away from that. And as far as my LPs, they're asking me, what are we doing? What's going on? What are we looking at as far as portfolio companies? All these layoffs, as we've all seen on the news, particularly what we see here in LATAM is it's prime. Right now, it's prime moment to actually allocate money, but with a very structured and very rigid strategy. Because the companies that were valued at a massive valuation gaps 2 years ago, 2021, have had, some of them have had down rounds, maybe down rounds, 40-60% down rounds. But the ones that are starting their companies within the past year and are right now raising capital, we've seen, at least in the past month and a half, at least 20 companies that are within 500 to a million or 1.5 million in annual recurring revenues, with actual positive operations and with valuations under $10 million, which is what we used to see back in 2019, 2018.
Mm-hmm.
Cash flow positive, which is a big difference. Now they're cash flow positive. And those are the gems that we're looking for as far as valuations, as far as execution, because you see the reiterations of all these founders going back and forth and seeing that their economics did not work first. They will not work unless they reach X amount of mass or critical mass. Nobody wants to wait for that critical mass. Very
I think we lost you for a moment. I don't know if you can hear us, but maybe you can repeat the last part.
No, that I said that it's prime. Yeah. Yeah. We're-
Just the last 20-second, maybe.
Okay. That we see it as a perfect opportunity to invest in Latin America, given the prices are low. People are a lot more focused on being cash flow positive, and the valuation and the possibility of valuations are definitely a lot more aligned with the metrics and the multiples than they were 2 years ago. And if these companies actually grow, you can have a lot of other companies that did not follow suit and are now losing all their operations or have no more runway to go. So they're prime for acquisitions as well.
Yeah, you're seeing down rounds or people being open to being acquired.
Exactly.
And thinking about it from the startup perspective, venture capital or taking on investors of any kind is really daunting. Navigating the gauntlet of due diligence, landing on a valuation, as you were just speaking to, there's been changes there. I'm curious if there are any major changes due to the economic climate in terms of either the process or how valuations are being arrived at beyond what you've already just covered.
I guess it all depends on the stage. Early stage investment valuations are just so up in the air. It really doesn't mean much. All about the team. Unless it's you have pre-revenue and your valuation is $100,000, $100 million, then it makes no sense. But if it's a good solid team, there's a little bit of runway, a little bit track record. Valuation is somewhat irrelevant. It's more about how the team has the ability to execute and to grow and to create an even better team as they grow. That's what we look at. Definitely, we have a high conviction chart where we definitely want to see all these different metrics and different points of the team and of the business model per se. But valuation at that moment, I think it's it's not a 48
Or wind.
I'll take a look at it.
Yeah, and we hear that all the time that investors invest in the people in the team and belief in their ability to execute. So that is still maybe one of the core pillars, you would say, along a credible problem and business model to address the problem.
Yeah, definitely you have to look at the problem solution, and if there's a market size big enough for it to be relevant to invest. But as far as multiples on invested capital, for me, if I'm investing at $1 million post money and I sell it at 8 million post money, it's still an 8x. If I do my pro rata, if I didn't get diluted, I'd get an 8x. Versus if I did a 10 or to 80, but the probability of going from 10 to 80 is a lot higher, is a lot smaller than from 1 to 8, or from 100 to 800. So that's where I try to look at the possibilities and scenarios and where the returns could be for my fund and for my LPs.
That's such a good point, right? Because there is that jump of people think like bigger, better, and more solid, but the stages of growth can be so challenging in the startup world. Thinking about some of the key metrics, both for investing in to a company as well as the expectations that you set for your portfolio companies, I'm wondering if there's been any dramatic changes in the recent months or years around looking at execution risk or burn rate or path to profitability. Is there anything, you mentioned a checklist. I don't know if that applies to your portfolio company.
The profitability.
Oh, we lost you for a minute here. Give it a second for the internet to come back.
Can you hear me?
There you go. Yeah, no, we lost you for a second. So if you wouldn't mind just starting over. Sorry about that. I think your internet looked like it's flipping a little bit. The mic green. we go. Looks like you're back. Are you moving?
Can you hear me?
Yes. Can you hear me?
Sorry.
Okay.
We have a little bit of...
Don't worry. We deal with this. I'm Mexico based, so this bit happened to me as well as the host. So we'll roll with it.
Perfect. So you were asking me about what we've changed as far as metrics and scenarios that we look at as far as path to profitability. Yes, there's been definitely major changes. We definitely don't want to see companies, or we're not interested in looking at companies that, let's say, they will be profitable in Q1 2025, for example. That's just no longer an option for us, especially when we have all these other companies that are being profitable or are a month away or a quarter away from being profitable if they follow their projections. So when you have those comparisons, it's like, why would I even go for this one who has a promise of when we have all these other ones that are already there and the units are solid and stable and they're growing double digits. On the other side, as far as burn rate, we definitely are looking at the burn multiple. Just see how efficient people are being at deploying their capital they're receiving. And that is definitely something that we are hyper-focused on. And if we have either a seat at the committee or a board of capital deployment and strategy for growth, we definitely want to be not micromanaging, but having being that voice of just sounding board where, hey, slow down, don't burn inefficiently, don't spend on marketing they haven't proven. Yes, do your reiterations, do all the things you need to do, but do it wisely, do it smartly, have something that actually gives you value, not just merge money because you have to grow and you're losing for every customer acquisition that you get.
Yeah, I remember having a conversation a while back around the shift from like growth at all costs to a much more, I want to say, holistic view of like successful business. And I think that has continued. That was probably almost a year and a half ago, that conversation, but it was starting to turn where it was like, no, it's not just that you can show that you're growing as a company. We're starting to look at more foundational business metrics and not be wooed by just the big billboard numbers.
Exactly.
Yeah, I love that. So, Christian, you have this unique perspective because you are a Central America-based fund, which, as you said, is quite rare. You're a bit of a rare species. Hopefully one that is going to grow and flourish and become much more common. And you also have a primary focus investing in LATAM companies and countries. So I'm curious, Latin America is gaining more attention as an up-and-coming market. What should people know about Latin America in terms of its emergence? And I'm curious also about the convergence of an emerging market with a down cycle economy.
Yeah. It's a mouthful.
Feel free to break that up into as many parts as you want, or I can reframe it how.
If you can reframe it,
yeah,
appreciate it.
For sure. But maybe just starting with what is unique about being a Central America-based fund that's focusing on Latin American companies?
First, so that's a good question. And what we've seen that has a big value is that we are away from Mexico City as we are always away from Bogota. Allows us to maneuver. Given that this is a very small and all about relationship business, to be able to move to Mexico City, to be able to move to Bogota in a matter of hours, probably within the same day or two, is definitely a major advantage to have as a fund. And then having the perspective of seeing the nascent market of Central America compared to these very well-developed markets as Colombia and Mexico are, particularly Mexico City, as what Mexico by itself was probably 40 plus. On the other side, Colombia has a ton of ecosystem for startups, probably the last one, but a lot of really good companies popping up every day and every month. So being able to connect those two pieces together is, I think, fascinating and then collaborating with other funds to invest and co-invest in Colombian companies or vice versa. It's really, for sure. Yeah. However, from Central American perspective, it gives us an even better point of view on what we need to do here to be able to grow and create a highway that connects the two these two developed markets, so Colombia and Mexico. And that's what we're trying to do right now with the Central American Capital Association as we move forward. And since this year, the new board, we are pushing hard to get these new regulations in place, particularly the fintech regulation, so we can create a huge runway between Colombia and Mexico.
Wow. That's so exciting.
It's either exciting, but it's also terrifying because you're dealing with so many different political perspectives and economic agendas to create one unified view for tech.
I was going to ask you, what, I guess, is the kind of ultimate desired outcome and what's the biggest challenge? Maybe you answered that in the political response.
Personally, my most desired outcome would be to see Central America as not just an emerging market, but as a primal place, as one of the, as you would compare it to Mexico, you compare it to Colombia, you compare it to Brazil, as top tier place in the world where people can come and invest in tech because it's a well-developed market with the infrastructure and regulations that are in place to be able to execute and grow from one country to consolidate Central America and Caribbean and expand if you want to Colombia, Mexico, and the rest of the world.
Wow. Yeah. And you have a timeline that you're seeing for this evolution, knowing that there's never a straight path in these types of endeavors?
You know me, I always want to do things as yesterday.
And you would like it done yesterday. Actually, last week would be better, but
Exactly. However, I took on the presidency this year, and my plan is at least to have it up and running by before my presidency is done in 2 years. So at least have one or two countries up and ready, implementing a multi-country sandbox for the fintech regulation.
amazing.
That is at least my goal, to have at least El Salvador, Guatemala, and hopefully Honduras jump on board and do the Northern Triangle, doing this at the same time to make it happen. That would be my goal within the next 2 years.
Wow. That would be incredible. I'm curious, how much would that change either the face of investing in sort of Latin America, Central America, or the kind of accessibility of those markets?
If you think about fintech, it's a common denominator for all tech companies. They all have to pay, they all have to charge.
Yeah.
It's the backbone for every business money at the end of the day, and the transactionability of that money and the movement of it. So if you have the possibility of not having to pay taxes to move money from one country, from one border to another border, which is the case right now, and makes it a lot more efficient and cheaper to grow from El Salvador to Guatemala to Colombia, to Honduras, to Mexico, without having to pay to move that money back and forth, then it becomes a lot more accessible for small entrepreneurs without having large wallets to the ones that are being financed by like massive funds or massive corporations.
Wow.
So having that fintech, that law in place and giving the chance to grow, that allows them to go to prop tech, that then allows to go to short, that then allows to go into all these other different avenues that will help the technological ecosystem grow as you have these multi-country sandboxes that can prove with the help of academia, with the help of lawyers, with the help of actual players of the economic value that will bring to each and every country, to the underserved, to the underbanked, to the under everything, and how we can potentialize all that will obviously generate more taxes for the population, for infrastructure, that probably these companies are already planning to do and incorporate into their business.
Wow.
So it's a virtuous.
Sorry, go ahead.
Oh, it's a virtuous cycle rather than a vicious cycle.
A virtuous cycle rather than a vicious cycle. I love that. That might be the title of this episode. And I always love when there's like a standout quote or saying that is really great. So something you just said reminded me of a discussion that you and I have had before around how a lot of your portfolio companies are de facto impact investments. So you just mentioned serving the underserved and bottom of the pyramid. Can you elaborate on that and whether that's a generalization that we can make about investing in LATAM opportunities overall?
We tried to stay away from generalizations in general, no pun intended, but I think that if you're investing in LATAM and founders that are trying to solve lady problems for the bottom of the pyramid, and therefore you're looking to have a massive market size of TAM that is billions of dollars worth, then you are definitely investing in impact, because you cannot, if you're investing in the company that is selling the most expensive sunglasses, then you're investing in niche. What we have is to say, if we are the customers, then we're definitely not investing in the company, because we're the need. And I don't want to sound arrogant at all in that expression, but definitely we're not the underserved. Just the fact that we have a computer, the fact that we have internet, the fact that we're here in this conversation, the fact that I'm Salvadorian and I speak English is just a differentiation in itself. The fact that we're able to do a venture capital fund and help, it's another differentiation. So yes, I do think that investing in LATAM with that particular scope is by nature investing in impact. The only difference is that whether you measure it or not. And the fund, we haven't measured it in the past, but starting with our third fund that we've actually just launched, it's actually all immediate starting today. And we have our press conference on June 1st. The first solely focused Central American institutional fund out of El Salvador. Definitely going to be measuring all the metrics for impact, and we're going to definitely apply those into Fund 2 as we haven't fully deployed, and we want to definitely have that as a part of our track record. I think impact metrics should become, not that we should all become impact funds, because I don't think everybody's made to become an impact fund, but I think impact metrics should be part of everybody's DNA.
Yeah, absolutely. I think that was one of the things you and I first connected on, probably due to the nature of the event that we met at, but also just a general kind of interest in how both interests can be served for investors who are open to maybe having a little bit of a mix or a trade-off of the financial versus the impact return. That's amazing. And I know for me, when I left corporate, it was one of the first areas I went and explored, like really interested in that opportunity. And I think it is one of the things that even 5 years ago, I realized was very underrepresented, even in impact funds, the struggle to really speak to the impact metric was missing. It was just to say, your money's doing good, so it's okay that the financials are a little bit less, right? Which is fine for those who are really driven for their money to make a difference. But I think if you want to go beyond that, then you need to be able to speak to it. And also, I think it's really important.
And as I said, you don't have to be an impact fund to have solid impact metrics. And for Fund 2, we have a couple companies that are doing some beautiful things for the underserved. We have a company out of Colombia that is focusing on giving you the possibility of all these underbanked populations to have access to credit for your house mortgage, pretty much.
Right.
So they have this omni-channel solution to mortgage as a service, where they give qualified leads to banks of all these people and to other financial institutions, non-banked institutions, and allow them to get a mortgage. And they're growing more than, I think, what was it, $60 billion of mortgages in the past 2 years, which were not being procured as before they even existed. So that's something, for me, I see it as the metrics of the company are solid, the unit economics are there, but they're all doing all this amazing work for people that would have never had the ability to have a dream home.
Yeah.
The size or the amount of mortgage or the value of the house may be, is the dream home.
Yeah. I try not to go on too many tangents because honestly, we could make a whole episode out of most of the things we've talked about. But I want to ask you a question there, because being from Canada, having spent a lot of time living in the UK, among a lot of other countries, looking at countries like that who have these very established, the concept of a mortgage is very established. But I will say also because of that, maybe outdated and in kind of a legacy context where like the US has a massive housing crisis right now for affordable housing. Part of that is due to supply, part of that is due to salary versus cost of housing, increasing mortgage rates. I'm not going to go into the economics. But something that I have found interesting as I live in Mexico and get to know how things work, right? We have this perception that there's no healthcare, there's no mortgages, like the things you get told when you first move here. As you are in the country, you realize actually there is, and some of it is tied to the government, but some of it is tied to what I would consider a very innovative private space we're speaking about. And so I'm actually I would love to just get your perspective. And I feel like I said, without going too far down a tangent around, do you think that there's an opportunity for countries that are perceived to have less infrastructure, less financial, institutional support for individuals to actually almost come out with like better results in the next few decades and more accessibility because there isn't this like legacy institution that can't really change fast enough to keep up with the current time?
I definitely do. I definitely do think that could be the case. We mostly sometimes see that the underserved, the underbanked, the people with less discretionary income are going to be the ones that pay the worst. And it's usually the other way around. The default rates are usually lower in microloans than they are in larger loans. At least you see that in LATAM. And there's another factor which is incredibly powerful, which is the embarrassment of knowing that having people know that you're not paying.
Mm-hmm.
You're in, as we say here in Spanish, in mora, in default. Shame is a powerful tool here, and nobody wants to be seen as the non.
Yeah, that's so interesting. I remember actually when I first studied political science almost 20 years ago, the concept of microfinance and the Grameen Bank and how successful loaning in kind of community was because of, I think it's a combination of the support and the pressure community. And it sounds that was initially created in Africa, but is very much the same kind of community dynamics that you're referencing in Latin America.
And then you have the other part. I know you didn't want to go on the tangent, so go.
That's right.
But it's the first time you're giving these people a chance to do it. So why really mess it up? You're giving them a chance of a lifetime to have a dream home, to have these high price ticket items that they've never had that will change their lives. And this one that buy now, pay later structures, to have a fridge. Why would they? It doesn't make sense for them to just do a one-time deal and pretend that's going to be the rest of their lives. If they have a steady income or something that they can do, they will want to pay it back to be able to get that TV, to get that kitchenette, to get that better life to cook for their kids, to the family. It just doesn't make sense to screw it up with nothing.
Yeah, absolutely. How important do you think it is for the companies that are creating these solutions to, I guess, embed sort of education around this. Is it a newer concept, or is the concept not new? It's just the accessibility is new.
No, I think education has to definitely be par with the concept and the product. You don't, I mean, if you, for example, and if you have equity in a mortgage and you're able to bring it out of that mortgage for them to use as discretionary credit line, you want to make sure that line is not used to buy new cell phones, new TVs, all these new gadgets that are of no added value. You want it to go to generate more cash flow or to generate education for the kids to have an impact rather than just be used as consumer spending. So
Yeah.
definitely, so yeah, definitely education has to be par with that. And I think that's going to be definitely one of the biggest struggles.
Mhm. Yeah. I wonder whether that individual companies or something larger. I think about when I lived in Singapore, for example, they love a public policy campaign, whether it's about how to be polite on the subway or I actually worked with a bank around financial education because majority of Singaporeans don't pay. It's a very heavily cash economy, and there's a 20% that live more in the banking system and things like that. And I think 80% at the time, we're going back a while, we're living in HDB, so Housing Development Board. We're fairly cash business based or cash employment. So there was a big shift to be done there. And it was something that the banks and the government back then were starting to look at. How do we make banking seem safe, which is a weird kind of feels weird, but how do we make investing accessible and understandable to people so that they can make their money work for them and then also obviously support the economy at the same time?
Here's a company that we weren't able to invest in. It was too later on in their stage and valuation for us to articulate would be relevant for them. But I love what they're doing, and it's a great company. I wish we could have been able to be part. Called Mosfer. They're out of Mexico or Panama. I don't know where they would say they're out of, but I think they operate in Mexico and now in Brazil. And they're doing some amazing things with fintech and education, as far as having the whole family be involved in the whole educational part of giving a credit card or a debit card to the kids and how much money they allocate into that account. And if they do their homework or they do their chores, they get more money and all these different bonuses they get. And it's a very interesting model that they're doing, and I'm fascinated by their business model and their vision. I hope there's more companies to come that can focus on other things that are educational and how all these other banks that are getting bankable are getting these tools to not lose it or to not mess it up because of the lack of education.
Yeah, I think that's such a strong point and such an opportunity to support the shift and to, I don't know if this is the right way to say it, but increase like privilege for more people. I would say like privilege of information. I know that I definitely am so grateful. And I think you and I probably both say we benefited from learning very early about how to manage our finances and other concepts. And some of that came in weird ways. Like I've had a job since I was 12, but I remember at 17 when I was moving out on my own and going to the bank and getting a credit card. And I already had a lot of knowledge about how to manage funds. So like the idea of giving a 17-year-old a credit card probably, but for me, it was at the time banks were charging on your debit. So it was like, I can put my groceries and all my stuff all on my credit card and then do one payment out of my bank account to minimize my fees, right? That was the logic behind it. But I thought that was just really normal to think that way until I got a little more out into the world and realized that was not the way.
Not the way we use it.
And not the way people use it, not the way people think about things. I think growing up, whenever I wanted something, my mom would always say, "What's your business case?" And that wasn't maybe necessarily exact words, but it was like, "Hey, like, why do you want to go? What's the benefit? What's it going to cost? Tell me the logistics. And then she would think about it. And I realize now it really shaped me into how I see and analyze and think about things, which again, growing up, you're like, this is just how it is. But you get into the world and you're like, oh, that's actually really helpful. Even if at the time it felt really frustrating.
It is definitely.
Let's come back to LATAM. I could talk about ability and underserved and changing economies forever. But I just want to come back to Latin America as an up and coming market in the perspective of the fact that we are in a down market, a low point in the overall economic market, and what that kind of means. If you see that as an opportunity or an offset.
Being in a recession?
I guess we're in a global recession, but Latin America is an emerging, up and coming market. Does that make Latin America a more interesting place to invest compared to the rest of the world?
I think it depends if you're dollarized or not. For example, here in El Salvador, the U.S. sneezes. We have chikungunya, Zika, and all these horrible diseases, metaphorically. And just because we don't have any monetary policy, we don't have fiscal policy. So any effect that has in the States, to any country that is dollarized in the LATAM, will be significantly larger. And however, having that said, I still see it as a massive opportunity if you have that. Because things will get out of whack as far as out of proportion in value to what it really is. And in a lot of places, I think it'll become really cheap to buy or to acquire real estate or to invest in companies that have run out of cash, and you can buy them on pennies over dollars. So I definitely see it as a huge opportunity, as it is in many crises, right? And there's all opportunities to get into. I think there's going to be a lot of changes. So it's also trying to be on the lookout for all these new regulations coming out. And energy, climate tech is definitely something to be on the lookout, as there's a lot of funds, international funds, that are trying to deploy more and more into climate tech, cultural technology as well. And the whole idea of reducing migration from LATAM to the US or to the rest of the world is a huge topic of conversation now. And a lot of DFIs are willing to put in the money to help create the solutions, reduce that migration, and to create all these SDGs that have been around for a while to actually get implemented by people that actually care within the countries. So, in my perspective, I think it's scary to be where we're at. It's definitely a lot of uncertainty, or some others would call it VUCA. But I
Lost you for a second. Oh, there you are. Lost you for a sec. A lot of uncertainty.
Yeah, and I would say that I personally thrive better in these moments of uncertainty. And I think a lot of Latin Americans are used to being in this uncertainty, given that we've all gone through a lot of wars, a lot of civil wars, a lot of riots, dictatorships, and all these political and social instability moments. And we, as a culture, we thrive with uncertainty. We thrive in VUCA.
In VUCA. That's such a good point. I love that you brought that up. If we were to zero in on Central America, I think LATAM is something that we've been hearing more about. It's still a bit unknown. It's been coming. But Central America is something, not necessarily something a lot of people have heard of in general investing or VC conversation. Is it the next Latin America? Is it a subset of Latin America? Is it TBD? We're not sure what's going to happen. What's your perspective? What would you want people to know?
Definitely the last enjoyed waters LATAM for venture capital. And I think it can quickly position itself as a top tier market for VC investment or private equity investment, given the abundance of natural resources and population. If you holiday Central America and the Caribbean, it's the size economically the size of Colombia, which is nothing to have on the side. Colombia is a massive economy. So if you consolidate Central America and the Caribbean, it's that size. I see it as an up and coming ecosystem that within the next 5 years, a lot of, I don't want to talk about unicorns, but I want to talk about companies with massive valuations and growth. I think in the next 5 years, we will see a lot of tech disruptors coming out of Central America into the world. Because there will be two paths. You either consolidate Central America or have the Israeli mentality. You're too small as a market to just have a solution for that country. So you have to create a solution for the rest of the world.
Yeah, I love that. I think that makes a lot of sense. And I think it's also something we're seeing, had a bit of discussion at one point around if you have figured out how to serve an underserved population in your country, there are other countries with similar demographic dynamics. Does it make sense for them to start from zero or to find a way, whether it's by serving that population or creating a partnership or some version of starting from 4 instead of 0, right? Like, how do we create a platform and a springboard?
Exactly. And I think that's why we should always be on the lookout for similar markets like Africa. I thought in Southeast Asia would be very similar to LATAM, but speaking with colleagues, there's some similarities, but not entirely. There's a lot of different things that are not even being used in Southeast Asia that are being used in LATAM. For example, PropTech. However, Africa, I think, has a lot more similarities. Different larger markets, obviously, but a lot of similarities on what techs are being used. The whole fintech and M-Pesa, for example, has radicalized Kenya and all what is East Africa and all derivatives of M-Pesa. And you see all the rest of the other countries are doing the same thing. And eventually going into the whole blockchain and decentralization of properties and developments in South Africa and the Congo and in Nigeria. I know a couple companies are trying to get into that, and this I think is fascinating. So we definitely have a lookout for what's going on in other countries, in other regions similar to ours. As you say, we don't have to reinvent the wheel. You just have to tropicalize it, or as we say in Spanish, lectaniz.
Love it. Awesome. So I want to be mindful of your time. Just wrap up with a question I like to ask. You and I have both been through a few economic cycles and geographies in our careers. So if you could leave listeners with one takeaway in regards to the recession and the economic cycle and just generally looking to obviously come out on an upswing, what would that be?
What would it be? What would I tell myself 15 years ago? Just grab on and rather than look at all the negative, all the bad news every day, which I try to stay away from, all the possibilities that you could create under micro-modeling. It feels like such a cliche, but it's so true to not look at, if you look at the news every day and see all the negative downturns and all the fallout that is happening constantly, hour to hour, then you're just going to be full of negativity. And you want to be able to see solutions, which are on every corner, there's a solution to be looked at.
Yeah, I think I always say cliches are cliches for a reason. So as much as you're like, oh, that's such a cliche, but they become that for a reason. And I actually had Kana on here a few episodes ago, and the whole topic of that conversation was about how to avoid getting really caught up in the doom and gloom and news cycle in order to thrive in difficult times. And it was a really good conversation. She had some really crazy personal contacts during the 2008 crisis, and how she was just, essentially was just so focused on what she had to do that she couldn't put time and energy into the bigger picture and what everyone was saying. Like, she just had to get through her own things, and she really came out on top and been extremely successful. Worked for some really impressive companies, as well as founding her own. And the juxtaposition of that conversation was a little bit more both of us, because like similar, I just was told I couldn't do it, had to do it. There was all this stuff, and I just did it. Like, it was just looking for the opportunities. And I love what you just said. There's opportunity on every corner.
And one last thing, if you remember speaking a while ago, a couple of weeks ago, I got burnt out, and it's really easy to get burnt out in crisis or recessions like where we're at, where everything feels like all the walls are heaving in on you. And I think my biggest advice to myself or to anybody is to give yourself some time to breathe. And if it's meditation, if it's working out, if it's going on a walk, if whatever it is, giving yourself some time to decompress is, I think, the most valuable thing you can ever do for yourself. Because if not, you'll get burnt out and you won't be able to see the computer in front of you or the notes in front of you. You won't be able to read it or give any value to yourself or to anybody around you. And this is coming from somebody who just went through a burnout cycle, had to stop to be able to smell roses. As far as a cliche as that might sound, but it was horrible, and there's nothing worse than feeling burnt out. And it's unnecessary. So having the space to talk, having the space to be able to communicate and to express what you're going through, and also having friends like you, Alex, to be able to chat. I think valuable for everybody to have, especially in these moments. With principle, we think we don't need anybody to help, but the more we talk on a personal level, on a business level, on the professional level, I think the better outcomes we will all get. For sure.
I could not agree more. And thank you for sharing, because I think that in itself is so powerful. Which we live despite social media and connection, like we still all live very private lives in the sense that we don't really know what's going on for most people. And it's really easy to see successful people like yourself. And I know you're on the go constantly, but to know that you do sometimes struggle, that you do have to figure out how to take time away, I think that's so important for people. And I love that it is more of a conversation, but I think that there's still a lot of room for that. So I just want to thank you for sharing. I'm not sure that we could have ended this on actually a better note, because it really is. I love that we're talking about both sides of the equation when we talk about the recession, right? Yeah, I want to talk about business. Yeah, I want to talk about how to figure it out and navigate it. But you can't do that if you aren't taking care of yourself. You are not, I'm going to say, like, at your best. That doesn't mean 100%, but somewhere in the range, optimal. It's really hard to make good decisions. It's really hard to move forward. It's really hard to stay in the more positive headspace if you aren't managing your headspace. So I think that's really a great perspective. So much for your time, Christian. If somebody wants to learn more about you, more about Innogen Capital, what's the best place to get in touch?
Best place would be either Christian last name Quiñónez, Quiñónez, and I think Sol at the end, or through our website innogencapital.com. I don't have any other social media, so those are the other two ways. Which would be Christian at innogencapital.com.
Awesome. Thank you again for your time. It's been a bit of a winding conversation, which I love, and I hopefully really as impactful and interesting for everyone listening as it was for me.
Thank you, Alex. I really appreciate the invitation. As always, conversations with you are amazing. I hope to have many more.
Me too. We'll definitely have you back for a follow-up at one of the future seasons.
Hopefully next time we'll be doing it before we go dive.
Yes, we'll do it in person right before we go diving in some beautiful cenote or reef. Absolutely. Thank you so much, Christian.
Thank you, Alex. You have a great day.
Thanks for tuning in. Our goal is to create connections and inspire conversations. So please subscribe, rate, review, and share this podcast with your network if you enjoyed today's episode. Sharing is caring. If you're ready to take your business to the next level and are curious how I can help, click the link in the episode notes to schedule a call. Got questions or topics you want us to discuss? Click the link in the episode notes to share them with us. Your question might even get featured in an upcoming episode. And remember, this podcast is not intended to replace legal, tax, or other kinds of professional advice. Thanks for joining us on this adventure. We'll catch you on the flip side.